How to maintain control in the stock market. Self-control is obviously one of the main qualities that makes you a better investor. It looks easy at first, but when you're in the game, things are also different. Your mind, if not trained properly, seems to work alone. I can tell you this by experience. It happened to me during my trading career. You can easily fall into the trap of greediness and fear. Greediness is an excessive desire for something, whereas fear is a very unpleasant feeling caused by the presence of danger. Human nature goes between the two extremes of fear and greed. But let me share you a secret. The key word is relax. Enjoy the ride. What is the worst case scenario? Maybe the stock loses some money, it's very difficult, it goes bankrupt. Whereas the best case scenario is unlimited returns. Remember, stick to the plan and don't let emotions get the best of you. If you think you're losing control, just repeat yourself, relax, everything will be fine. In this way, you'll be less stressed and more open-minded. You will be able to understand when an opportunity is close. Because if you think less about the price and more about the fundamentals, you will do great. Something I suggest is set reminders on your phone. You will do great, everything will be fine, or something like that. Or even post-its, so that every time you turn your head left, right, you will read something that will motivate you big time. Many people get greedy because they think they'll be too old when they become rich. But that doesn't make sense because many investors look better after being patient, healthier, happier, even better looking. Remember, Rome was not built in a day. Neuroeconomic, as it's called, combines elements from neuroscience, psychology and economics to better understand financial decision makings. In the book, Your Money in Your Brain, Jason Zweig details how financial losses have a physical effect on our mind. When we lose money, we feel at risk. In fact, we feel like everything depends on money in our life, and the worst case scenario would be losing all the money. Now that's the catch, because if we accept this scenario, we would eliminate fear but embrace greed, because we would risk a lot more. But we don't need to do that as long as we remember these three simple steps: long-term investing, some diversification, and learn from few losses. Remember, always stick to the plan and relax. If you want more money to back up your investments, there are plenty of activities out there. For example, I buy and sell stuff and I'm getting better and better. This way you can keep your body active and free your mind. That is very important. Many times it may seem around you that people are making a lot of money, but that is not the case. In fact, during high volatility, people tend to speculate a lot and eventually lose money. If you don't want to fall into the trap, remember, every time you're about to buy, say yourself, am I comfortable with this 5 times? Also remember, never lose money. This sentence is fundamental.